and that's what we are.
Perfect. And then in terms of the paperwork, then I suppose very quickly, what does someone need to get a mortgage lined up in the UK? And do they need to go to the UK in person? Do they need to have in-person meetings? What do they need to do?
Sure. No, great question, and one that we do get a lot. So in terms of the documents required, there's going to be three main things for a purchase: proof of identity, proof of address, pretty straightforward stuff. That's going to be a passport and a utility bill or a bank statement, but also evidence of your deposit. So this is something in the UK that has become a lot more prominent over the last few years, is where is your contribution coming from? Is it savings from investments? Have you sold a property here in Hong Kong? Are you withdrawing some investments or some stock? Have you got a gift from family? All of these are fine, legitimate reasons to be used as your deposit proof, but we just need to evidence where it has come from and show the lender the source of those funds effectively. So those are the three main things. If we are then going to a lender then that requires income proof, for income proof, it's usually going to be 3 months pay slips and sometimes a letter from the employer just confirming your start date, your role, and what your income is. And then they'll usually take a look at some bank statements and things as well. But look, I think from that side, that's kind of where we can really add the value. We know exactly what they are and are not looking for, so we can kind of present the case as best to the lender to make sure that we're getting the best option for the client.
Nice. And just to clarify, because I get asked a fair amount in terms of the mortgage product that people are taking out. I know you mentioned you work with some banks based here in Asia, but the majority of the banks that you're operating with on a day-to-day are UK based banks. So the product you're getting is a UK based mortgage. So you will have an account set up there. You will have sort of exposure to that UK market, right?
Yeah, so yeah, where we are whole of market, we've got access to all of the lenders. Some of them are based here, some of them are based in Singapore. We work with offshore lenders, private banks, Islamic banks, but the majority of them are based in the UK, and that's because it's UK property that we're getting the lending against. One of the questions that you asked earlier was, do I need to go to the UK? No, that's not the case at all. Don't have to leave Hong Kong for it, for signing documents or anything like that. The other point just to mention is about the bank account. Now, some lenders will set up a bank account for you as part of the application process, which is great if you don't have a bank account, but not all of them do. Some will require a bank account set up prior to submitting the application. Look, we've got contacts who can help with that if need be, but not all lenders will do that. So some of them do. I would say in general, the private banks will do that for you. And then there's a few other more specialist lenders that can arrange that for you as well. Regarding the what was the other bit you said about?
What did I say? Go to the UK, paperwork that's needed. No, I think you covered most of it. I suppose the other question, the follow-up with that would be, can you give us a breakdown of fees? So from start to finish, someone's getting a mortgage, including your fees, there's going to be a broker fee, but then in terms of what fees they're likely having to pay to a bank and all that type of thing.
Yeah, sure. So from the setup costs of the mortgage, there's kind of a few main things. There's going to be stamp duty payable that everyone has to pay it. You have to pay it. I have to pay it whenever we buy a new property. That's part of the house buying process. From the lender's side, there's three main fees that they charge. The first is going to be what we call a valuation fee. So every lender gets a valuation done prior to lending. It's to make sure that the property is suitable for secured lending purposes. So what will happen is they'll appoint an independent surveyor to go and inspect the property, provide a report to the bank, and then they'll sign up the property, which is great. Depending on the lender that we go to, you may also have to pay for the bank's legal fees. Now, the client will have their own legal fees. They may have the bank's legal fees as well. Some lenders offer free legal fees. It really depends on the lender. Some of them offer a free valuation as well. And then the third one is going to be something called an arrangement fee. So this is like an application administration fee. It might be a set figure, a couple of £1,000, or it might be a percentage of the loan amount, maybe 1%, maybe 2%. Really depends on the lender. Usually, for some lenders, this is paid upfront, but for most lenders, it's actually deducted from the loan on completion. So those are kind of be your three main lender fees. From our side, we do charge a broker fee. It's a flat fee, £1,500, and we only charge it once we receive the full mortgage offer letter from the bank. So that will be after we source the options for you, after we get the approval in principle, submit the full application, get the underwriting approved, get the valuation approved. Only then does the lender provide the mortgage offer letter. That's the one and only time we charge you our fee. Obviously, we're not going to just leave you at that point. We'll obviously be with you all the way through to completion to make sure everything goes smoothly and any post-completion matters as well.
Nice. And then I suppose the majority of people, final sort of question or so, majority of people, are they currently getting 2-year fixed, 5-year fixed, variable rates? What's popular at the moment?
That's a really good question, actually. And not to sound like a cop-out answer, but it really does depend on the client's situation. So there's kind of three main products in general when it comes to the mortgage interest. You either get a 5-year fixed. So a 5-year fixed is where you're locked in for those first 5 years. Usually on the buy-to-let side, the rental stress test is a lot more favorable. So it's easier to borrow a larger loan to value. The nice thing about a 5-year fixed is that you've kind of got a bit of consistency. You don't have to worry about it for the next 5 years, and you can borrow that high loan to value. The disadvantage is that if the rates do come down dramatically over the next few years, you don't really get to take advantage of that until you get to the end of your fixed rate period, unless you incur early repayment charges, which vary from lender to lender. Next, you would have like a 2 or a 3-year fixed product. The advantage of this is that you have a bit of consistency for the next couple of years. And you know exactly what your monthly payments are. So it's quite nice to manage the cash flow there. The advantage being that in a couple of years, when rates are expected to reduce, you can then refinance and hopefully lock in something cheaper at that point. The disadvantage with a 2 or a 3-year fixed is that usually the rental stress test is a bit tougher. So it's harder usually to borrow a larger loan to value. There are lenders, however, who do something called top slicing, which is where they'll do their rental stress test assessment, but then they can also use your income to top up the monthly payment so you can borrow a larger loan amount. But not all lenders do that, unfortunately. And then finally, there is the tracker product. The advantage of this is that as base rate reduces, you immediately get to take advantage of that. However, if base rate were to increase, then you would immediately have to pay a higher rate. However, the kind of trend at the moment is that rates are coming down. And the other nice thing about the tracker products is that usually they have low or no early repayment charges. So if rates do dramatically reduce and you want to exit that tracker product and get onto a fixed rate at a lower rate, then you could do that without any exit penalty. So it's a bit more flexible.
Okay, fine. And then I suppose to round it all off, are there any sort of tips or tricks or anything that you would recommend to people looking to obtain a mortgage in the UK that would be worth doing or looking at, or anything that you advise clients before they start the process that would put them in a good position?
Yeah, so I think off the back of that, there's a couple of things. Starting the process early is the way to go. We can help manage that timeline, particularly for a new build, where we work with lots of these big developers. We have the relationships there. We know what the deadlines are going to be. So we'll make sure that everything is in time for that, so that we're not missing deadlines and we're not submitting stuff too early, so we have to reapply. That's part of the process where we can really add some value. Most lenders are going to require 3, 4, or 6 months bank statements. So keeping those nice and tidy, not too many large transactions is always helpful. Trying to make yourself as clean as possible is certainly a nice way to make things a bit easier moving forwards. And then a final one, which probably goes without saying, but make sure you maintain your mortgage payments if you do have any existing mortgages. If you do have missed or late payments, they are going to become an issue at some point. There are lenders that we can work around that with, but the cleaner you make your kind of credit profile, the easier it's going to be for the application process.
Perfect. Amazing. Thank you so much for that. We'll link in your contact details for anyone that wants to get in contact. But yeah, Amazing. I appreciate your time.
No worries. Thanks very much. Cheers.
Thanks.